Hello everyone, it's Davide here and welcome back to Learning Finance. So, this is the third week of earnings, okay? Which is gonna be a huge week ahead. So, the last week I did a video with the companies to watch that week. I'm gonna do the same this week as well. So, I'm not letting you down in this very important earnings season. So I'm gonna give you 9 companies that will release earnings this very week and which I'm gonna pay very attention to them. So just leave me a like, an early like if you find this video interesting. You will help me a lot to reach more people and grow the channel. So please just leave it and subscribe to the channel. Let's begin. So guys, we start with Tuesday in the pre-market. If you are interested in any restaurant stocks, we have McDonald's, which is gonna release earnings before market open, and the consensus for McDonald's is 0.74 as earnings per share. While the same day in the aftermarket, it's the turn of Visa, so ticker symbol V. The earnings per share, the consensus is expecting $1.03 per share. When we look at McDonald's, the stock is now trading at around $198 and the market cap is $147.7 billion. Now, about McDonald's, we can say that the previous quarter they missed the expectations, so in Q1, and now this is basically the heart of the pandemic problem. So you can imagine a lot of McDonald's restaurants have been closed for the last 3 to 4 months all around the world. They beat expectations in Q4 2019 and they missed again in Q3 2019 and they met expectation in Q2 2019. Overall, this is a company that it looks like it's decreasing their revenues during the last 4 years. Now, McDonald's, it's kind of a controversial business right now because, okay, it's a restaurant, but we know that they are doing this kind of fast food while a huge part of the world is going through more healthy food. So it's gonna be interesting to see how McDonald's will adapt to this new wave. When you see companies that are continuously decreasing their revenues over the years, is not something that I like to see in a company. Now, another very interesting fact about McDonald's is that if we go to see the financial and the balance sheet, actually, we realize that they have a negative stockholders equity. So probably not many of you know this. What that means is that it's like American Airlines, okay? They have more total liabilities than total assets. So this is another thing to bear in mind for McDonald's, and that thing, you see the trend is always increasing. They were minus 2.2 billion in 2016 and then 2017 minus 3.2, minus 6.2, minus 8.2. So this is something to bear in mind. I personally don't like McDonald's and I'm not planning to buy any stocks, okay? Anyway, this will be a guide to understand how the restaurant business has done overall during this drastic Q2 quarter. While when it comes to see Visa, ticker symbol V, the stock is now trading at around $195.15, and I did a fundamental valuation about it. If you want to see, go to check it out. Basically, the stock is now trading at the fair price, okay? So not at a premium, not at a discount. It will be very interesting to see how it will react to the Q2 earnings. So we are expecting 1.03 earnings per share. As you can imagine, the business of Visa has been hit, okay, during this period because the economies were shut down, so also consumer spendings and transactions decreased a lot, okay, almost around 30% for MasterCard, which is the direct competitor of Visa. It's gonna be very interesting to see what will happen to Visa as well. We can see that the previous earnings, which they beat expectations, were around the estimate around 1.35, and now they are expecting minus 30%. Okay, so around 1. It will be very interesting to see if they are able to actually pass these estimates as well, or if they are gonna miss the estimates, which is what I am hoping, because honestly, if the stock drops a little bit in the short term, I will probably consider to buy some shares. Okay, I told you that it's trading near the fair price, so if it's go down a little bit, well, why not? It could be an opportunity. And overall, it looks like a Visa, it doesn't miss expectations. Okay, they met expectation in Q4 2019 and beat in Q3 and Q2 2019. So interesting enough. The revenue, we see that has been a consistent growth during the last 4 years for Visa, and wonderfully also the earnings. Okay, so very great margins. Look at that, around 50% in net margin for Visa. It's a wonderful business and it's a very interesting stock. Now, Wednesday, we have in the pre-market Shopify and aftermarket Facebook. Okay, so here starting to come some very interesting names in the tech and online business industry. We have that the consensus for Shopify is zero. Okay, $0 per shares as expectations, while for Facebook 1.39. When we look at Shopify, we realize that the stock went literally crazy during this pandemic. Okay, because it has passed from $357 to $1,000 in basically just 2 months. Okay, absolutely insane. And now, of course, Shopify, so online industry, online retailers, online businesses, everything went through the online environment during this pandemic. And this is absolutely normal. Everyone was at home. The only thing you had in mind was on PC and devices, okay, so smartphones and stuff like that. So the business online is, of course, exploded, okay? Anyway, this stock is right now at $110.8 billion. And this is a company that, bear in mind, is absolutely no profitable yet. Okay, we can see clearly they were basically all the times in the negative, all the years in the annual. And this thing, bear in mind that what I don't like much about it is that the revenues just skyrocketed in the last 4 years, which is huge, for around $400 million to 1.6 billion in 2019. Anyway, the thing is that earnings continue to go down. Okay, that means that they are not very much able to scale the business right now. It's like more they have in revenues and more they lose in earnings. So to be a healthy business for real, I would expect to see revenues going up, but they become profitable, okay? Also earnings going up. Perfectly fine to be not profitable at the beginning, but if you scale the business and you have this amazing growth in revenues, well, at least you have to push earnings in the positive side, okay? And they are not able to do that. So it will be interesting to see here what will happen. They are expecting a break even for Q2, and we will see. Overall, they beat expectations in the previous quarter and as well in Q4 2019. They missed in Q3 and they beat in Q2 2019. Okay, so overall, we will see what will happen. It's a stock that it's interesting, but the valuation right now, in my opinion, is huge. And as I told you, probably I would like to see a kind of reversal, okay, an improvement in the efficiency and scalability of the business for Shopify. And then we have Facebook, ticker symbol FB, which is now trading at 232. It's been pretty stable over the last month in June. You know that I own this stock and I did fundamental valuation about it. If you want to see, go to check it out. It's very near the fair price right now, okay? I find a fair price which is around $215, $220. So basically we are at the fair price. They missed expectations by a little bit in Q1, and we are gonna see what will happen right now. The expectation is 1.39, and they beat expectation in Q4 and Q3 and in 2019, and missed in Q2. Overall, you know that, in my opinion, whenever the stock Facebook goes below $200, for me it's an opportunity to buy over the long run. What we have to know about Facebook is that their business is all the times there is someone that don't like it, okay? So it's kind of, they do some kind of filings and stuff like that. For example, we had the problem with the data a couple of years ago, and now the boycott stuff. Anyway, I believe that overall this business here is one of the most efficient business in the tech industry, okay? It's better than probably all the competitors. And if you go to see the valuation, I show you everything, okay? All the data you need to know, and they have a current ratio more than 4, which is incredible for a company that has 600 billion in market capitalization. And the margins are awesome. And never forget that Facebook is moving through the Indian market, okay? So India and the emerging market as a method of payment through WhatsApp, okay? So it's a big opportunity, a very, very huge market, and it will be very interesting to see what will happen in the future. So overall, if the stock goes down below $200, in my opinion, I already hold Facebook, but I'm gonna probably buy more. Overall, this is one of the best company out there, in my opinion, for the long run. While Thursday, guys, Thursday is an incredible day for the Nasdaq, because look at that. All of them in the aftermarket, we have the 3 big friends, okay? So Apple, Amazon, and Google. This will be, considering the fact that the day before we have also Facebook, an incredible week for the Nasdaq. So pullback is coming. Let's see. We have Apple. The consensus is expecting an earnings per share of $2.03, while for Amazon 1.37 and Google 8.23. Let's start with Apple. We have that the stock is now trading at around $374 per share, market cap 1 trillion. When it comes to see the previous earnings, we have that they beat expectations every time, okay? So very incredible company. And they beat expectations also in Q1, and it will be very interesting to see how this very bad quarter will be, because this has been probably one of the worst quarters for 90% of the companies existing in the world, okay? So they are expecting a 2.03. Let's see what will happen. I did a fundamental valuation about Apple as well. It's a very great company that, anyway, in my opinion, right now is a little bit overvalued, okay? I find a fair price around $330 per share. So it will be interesting. The thing is that, of course, the enthusiasm, if it continues to beat expectations all the time, it will always trade at a premium, okay? It's very difficult to find bargains in companies, wonderful companies like Apple. So we will see what the market will offer. While when it comes to Google, guys, the market cap is $1 trillion. The stock is trading at $1,500. And I did a discounted free cash flow valuation about Alphabet, so Google as well. And I find that this is the fair price, $1,500. So it will be very interesting as well to see what will happen right here. We see that they missed expectations in Q1 and they beat in Q4 2019, and they missed in Q3 and beat again in Q4. So, well, it's a little bit of kangaroos expectations and actuals, okay, when it comes to earnings for Google. We will see what they will do Thursday. Honestly, this company, guys, could be another bargain long term, okay, if it goes down a little bit. I showed you that Apple is kind of overvalued, but Google and Facebook, in my opinion, they are very near the fair prices, okay? So if we have a negative earnings, a lot of volatility, and the stock is going down a little bit for a couple of days, well, it could be an opportunity, okay? When it comes to the revenues and earnings, it's simply wonderful, okay? Over the last 4 years, they passed from just below $100 billion in revenues to above 160 billion in revenues. Okay, so it's wonderful companies, and also the earnings are quite decent. Okay, with the decent margins in both 2018 and 2019. And as Facebook as well, they moved to India. Okay, a huge part of their business is in India. So let's see, because emerging markets for these kind of tech giants, they represent a very huge future. There is a lot to be done in those very big countries like India for them. And then we have Amazon, okay, one of the biggest players in this pandemic. Okay, the stock is now above $3,000, which is huge, and the market cap $1.5 trillion. And as we can see, in my opinion, I did a fundamental valuation about it as well. The stock is probably overvalued. Now, what is the thing? The thing is that in a pandemic, when everyone buys online, plus the enthusiasm about the cloud business, well, the stock is absolutely normal that it's trading at a huge premium. And I say a huge premium because I find a fair price, which in my opinion is around 2200. And this means that the premium is almost 40%, okay, 38%. So if you're willing to buy it at this price, well, I don't, but do whatever you want. Over the long run, it's an incredible company. We can see that even though the price is so huge, they missed expectations in Q1, and we will gonna see what they will do this as well. You see that when you look at Amazon, when you look at the price, actually, you would expect, I don't know, something incredible. But the reality is that they missed in Q1, and they missed in Q3, and they missed in Q4 2019. Okay, so overall, let's see what happens. In my opinion, the price is quite high right now. And when it comes to revenues, we see that consistently going up. Anyway, when it comes to earnings, Amazon is probably one of the worst businesses out there. The efficiency of Amazon business is just very, very bad. They have a net margin which is ridiculously low. And I showed you in the comparison that despite the fact that Amazon makes $280 billion in revenues, when it comes to earnings, they earn less than Facebook. That basically they make below $100 billion in revenues. Okay, so very, very bad net margins. And I think that probably the cloud business will help them a lot, okay, because right now the situation is not probably one optimal, okay, comparing with the competitors that they all have margins above 20%, while for Amazon they are like 4% in 2019. And then if you like energy, we have another very interesting day on Friday, because in the pre-market we have Exxon Mobil and Chevron Corporation, which they are the two oil giants. Okay, they are, both of them are dividend aristocrats, and I own Exxon Mobil. I did a video about it. I did a fundamental valuation about it, so you can go to check it out. And the consensus is telling that the earnings per share for Exxon Mobil, they expect a loss of $0.61, and while for Chevron Corporation minus 0.91 cents, okay, 91 cents in loss. When it comes to Exxon Mobil, we have that the stock is now trading at $43.43 per share, which is the fair price. They beat expectations in Q1 by a lot, and now of course this has been a very bad quarter for oil. We saw the drop back in April, so probably the worst ever. Bear in mind, ExxonMobil is now reporting a loss in a quarter for around, I don't know, 15, 17 years, probably since 2008. So it's a very great company, and let's see how they will do actually in the actual, okay, because you never know about them. They missed expectations in Q4, they met expectation in Q3 2019, and they missed in Q2. Anyway, overall, I'm not worried about ExxonMobil. Very great dividend okay, because right now the dividend is 8.01, which I don't think that they will cut it, okay, so that's why I am invested in Exxon Mobil. They are dividend aristocrats since more than 30 years, and I really believe that they want to keep that status. So they will do whatever it takes to maintain it. While Chevron Corporation is trading at $90 right now, I am not invested in Chevron Corporation. Anyway, they are dividends aristocrats, and together with Exxon Mobil, they are the two companies with they have less debt in the oil industry. Okay, so if you do the debt to equity ratio. So if you are interested in oil companies, in my opinion, those two are the two best players, okay, to jump in, especially if you like dividends. Chevron Corporation is offering a 5.73% right now, and their earnings are expecting a huge decrease, and they beat expectation in Q1, in Q4 2019, and in Q3 2019. So it will be interesting how they will react to this very bad quarter. So I hope you find this video interesting, guys, and leave me a like and leave me a comment below. Tell me if there is one of these companies that you are interested in, and subscribe to the channel. And as always, guys, have a wonderful day.